It's also fascinating to watch this play out against the backdrop of an increasingly concerning situation for Italy and the broader Eurozone. As you've heard, the ECB on track to raise rates for the first time since 2011 this week. 25 is the base case, but policymakers say they're looking more closely at 50 now. What is the necessary path, in your view, Professor?
Yeah, as you said, the event is to be considered from a financial market point of view, together with the decision by the ECB. I think today there is a case for maybe a larger increase, but most likely the ECB will go for only 25, and at the same time signal a larger increase in September. This, in my view, is the most likely case. But most of the attention will be on the so-called anti-fragmentation tool that the ECB will unveil tomorrow, and it will be crucial because that would be the tool to prevent the widening of spreads within the Eurozone and help countries like Italy that might face some tension in financial markets. That would be a very difficult balancing act, in my view, because combining the need to be credible versus financial markets on the one hand, and at the same time respect all rules and governance frameworks in Europe is very challenging.
Lorenzo, it's Hadley in Abu Dhabi. Just spell it out for us. What's the worst case scenario in your view with regards to what happens next?
Well, in my view, early elections should not be considered as the worst case scenario, because at the end of the day, it would actually bring forward the elections that would happen in the spring of next year anyway. But from the point of view of financial markets, I think there is a risk that financial markets take early elections as a moment of discontinuity. And if combined with the desire to test the resolve of the ECB to prevent the widening of spreads, might actually be a recipe for some turbulence.